Think your shop is doing fine because the bills are getting paid and the bays are full? What if I told you that number you don't look at, the one on your balance sheet, might be telling a different story? This is video 2 in our Auto Repair Financial Mastery series, and today we're covering one of the most overlooked tools in your business, your balance sheet. By the end of this video, you'll know how to read it, what it really tells you about your shop's financial health, and how to spot the problems that don't show up on your profit and loss. A balance sheet gives you a snapshot of your business at a single point in time. It's made up of 3 parts. First, your assets, what your business owns: cash, tools, equipment, inventory, accounts receivable. Second, liabilities, what your business owes: loans, credit card debt, unpaid bills. Third, there's equity, the difference between the two. It's what the business is worth after the debts are paid. And the formula is simple. Assets equals liabilities plus equity, and it always has to balance. Your income statement tells you how your shop performed over time. Your balance sheet tells you how your shop is positioned right now. And here's what most shop owners miss. If your balance sheet is wrong, your profit and loss is wrong too. That's because the two are directly connected. Profits from the P&L flow into retained earnings on the balance sheet. Bad data on assets or liabilities throws off your revenue and expenses. So if no one's reviewing your balance sheet, your financials could be off and you wouldn't even know it. Let's say you've got 2 shops. Shop A has $100,000 in assets, $80,000 in liabilities, and $20,000 in equity. Shop B has $200,000 in assets, $50,000 in liabilities, and $150,000 in equity. They both might look profitable on paper, but Shop B is in a far stronger position. They've built value, they've got options, they've created a shop that could run without them, or one that could actually sell for a meaningful amount. Let's look at an anonymous balance sheet from one of our real CSI clients, a successful auto repair shop that's been working with us for several years. Assets: cash on hand, $42,000. Accounts receivable, $18,000. Inventory, $26,000. Equipment and tools, $150,000. Total assets, $236,000. Now for liabilities: accounts payable, $12,000. Credit card debt, $8,000. Equipment loan, $80,000. Total liabilities, $100,000. And for equity, $136,000. That's the value this shop has built over time. When this client first came to us, their books were showing profit, but their balance sheet hadn't been touched in years. It was riddled with bad data and missing info. After a few months of cleanup, they were able to see exactly where they stood, and that changed how they managed growth, investments, and even pricing. If you're ready to get a clearer picture of your shop's finances, don't forget to download our free auto repair accounting kit. It's linked in the description. It's packed with checklists and tools that walk you through the same process we use with real clients. Here are some of the red flags we see all the time. Negative equity: you owe more than you own. High debt ratio: you're leveraged too heavily and at risk in slow seasons. Low or declining cash reserves: even a profitable shop can run out of cash. Unreviewed balance sheets: if no one's reconciled it recently, it's likely wrong, and your tax return might be too. A wrong balance sheet leads to wrong taxes, wrong strategies, and missed opportunities. Your balance sheet isn't just an afterthought, it's a tool, and if it's full of errors or never reviewed, your entire financial picture is off. Start reviewing it monthly, ask questions, and if something looks off, fix it now, not next year. Now that you know where your shop stands, let's talk about what you're actually keeping from each job. In the next video, we're breaking down gross profit margin and introducing the 60-40-20 rule that the top performing auto repair shops follow. At CSI, we don't just hand you reports, we walk you through them. If you want a team that helps you clean up your books, understand your numbers, and plan for growth, click the link below to schedule a free consultation. And while you're at it, make sure to download our free auto repair accounting kit and subscribe to our channel so you don't miss the rest of this series. It's all linked below in the description. Next up, gross profit margin: how much you're keeping, how to calculate it, and why it's the most important number your shop probably isn't tracking closely enough. See you in the next video.